Hi, I'm Srimathi from BCom Digital Marketing and Data Mining Department. We'll see the topic is various heads of income. The special category is gross income. In income from house property. First of all, we will see gross income from house property category. As amid Finance Act 2022, income from house property, income charitable to tax under the head house property rental income from a property being building or land apparent thereto of which the taxpayer is owner is changed to tax under the head income from house property. The income under the salary head involves the employee's basic wages, pensions, perquisites, gratuities, commissions, annual bonds, and any salary paid in advance is applicable. And the main case is gross total income. Gross income refers to the total income earned by an individual on a paycheck before taxes and other deduction. It compares all income received by an individual from all sources, including wages, rental income, interest income, and dividends. And what is the gross income? Gross income refers to the total income earned by individual on a paycheck before tax and other deduction. It expresses all income received by an individual from all sources, including wages, rental income, interest income, and dividends. For example, the revenue earned by an individual for rendering consultancy service amount rupees 3 lakhs. The figure represents the gross income earned by the individual. For business, gross income can also refer to as gross profit when preparing financial statement for companies, and it equals the revenue from the sales of goods or service less the cost of goods sold. The revenue source of companies' income from selling goods and service, intellectual property income for rental property, capital gain and investments, etc. The gross profit is a line item in profit and loss statement. The gross income versus net income we will see. First one, the gross income is sum of the income received from providing service to client before deductions, taxes and other expenses. On the other hand, net income is profit attributable to business or individual after subtracting all expenses for a company. Net income is calculated by subtracting all business expenses such as tax due, advertising cost and interest expenses plus an eligible deduction like professional and legal fees. How to calculate gross income? The gross income is the individual of a figure required by a lenders when deducting whether or not in advance credit to an individual. The same applies and landlords when determining whether a potential tenant will be able to pay the rent on time. It is also the starting point when calculating taxes due to the government. Gross income of an individual. The gross income of individual is the amount of money earned before any deduction or taxes are taken, but the individual employee on a full-time basis has their annual salary or wages before taxes as their gross income. However, a full-time employee may also have other sources of income that must be considered when calculating their income. For example, any individuals on taxes held by an individual should be factored into gross income. Other income should be considered, including income from rental property and interest from income for investments and savings. Thank you.